It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
The RBA decided to hold the cash rate at 3.6% today. I think it's mainly on the back of the recent inflationary data, which came in a lot hotter than they expected. We saw the headline number rise to 3% the 12 months to August, which is the highest level in 12 months. Cash rate held at 3.6%.
And that is Anthony Landau after the RBA decision on Tuesday to hold off on dropping the cash rate. And welcome back to the Real Estate Breakfast. Hope your week is tracking in the right direction. And remember to catch up too with the latest Aussie real estate podcasts, because as you know, there are over 1,300 property podcasts talking about your local property market. And it's a Thursday, October the 2nd. Good morning, Celeste in Sydney. Thank you so much for your email which we received. And you have got some advice for the younger you to give out. Now, this is an interesting one. You're 47 years of age, and you say that you were in a relationship for 20 years, which was more about living life to the fullest and not necessarily thinking about the future, i.e. buying a home. You talk to your partner, you say, many times about saving for a property. And whilst he said, yes, babe, we should do it, nothing was organised. You say that you loved him, you were young and foolishly thought that somehow it would happen eventually, that you would buy property. 3 years ago, you say that your relationship ended, and you then started to seriously save even more. You say that you're 48 next month, and you should be into your first unit by the end of this year. You say that for any girl out there riding life like a psychedelic dream, thinking that property ownership will come later, don't, you say, make the same mistake that you did. If your partner doesn't follow through on saving for a property, the answer is leave him. He's not responsible enough. In your case, you say that you're childless, you're single and about to enter the property market for the very first time. Don't make the same mistake. You say that life is too short. Wow. Celeste, thank you so much for the honesty of that email and also the straight talking advice that you have given. Normally I can weigh in and say that this is such great advice, and young women in the same type of relationship as you will take this advice on board. But sadly, Celeste, they won't. It's love. You know, he's wonderful. He's my everything. And they'll say that that happened to you, but it won't happen to me. Yes, it will. You just can't see it right now. And let's face it, 20 years goes by in a flash. So let us know if you are perhaps a parent trying to advise your daughter, or maybe this has happened to you just like Celeste. Let us know. You can leave a voice message below, or our email address, as always, is myrealestatepodcast@gmail.com. Love to hear from you.
If you're a new listener, welcome. We talk to the most knowledgeable real estate experts across Australia every day from 6 a.m.
So the RBA on Tuesday, their decision was predicted. I'm the eternal optimist. I did say that there was an outside chance that the RBA might drop the rate. That wasn't to be. Michele Bullock on Tuesday held the press conference explaining why there is no change to your mortgage rate. And some of the questions from the press members are dumb, which is why I've broken out some key messages from Michele Bullock. The first question being the economy right now.
Yes, I think the economy still is in a good spot. I mean, we have inflation basically in the 2 to 3% range. The unemployment rate is holding at around 4.2. We expect it'll drift up a little bit, but we still expect it to be relatively low. The monthly data are volatile. We've got 2 months months now of the quarterly number, and a couple of components, market services and housing inflation, were a little higher than we were expecting. So we're just being a little bit cautious about that. I don't think suggests that inflation is running away. I just want people to understand that when we're lowering inflation, that doesn't mean we are lowering the price level. We're lowering the rate at which prices are increasing.
And this is an interesting question that was asked, and that was, could there be a scenario where we have no further rate cuts, and what that scenario could look like? And as referenced by Michele Bullock, it could be a good news story for Australia.
Yeah, and it could be. I mean, we've got scenarios on the upside, and one scenario on the upside might be that real income's rising, wealth rising, and consumers now start to spend again. Many households, for example, with mortgages, they've actually been saving rather than spending everything. So as their mortgage repayments have come down, they've opted not to reduce their mortgage payments, they've maintained them. So that's suggesting a bit of caution. So one upside scenario is a positive one, that they react to that and they start consuming again. That's good for business, good for employment. That's not a bad news scenario, and if that means that we don't lower interest rates further, then I wouldn't say that's necessarily a bad news story. The alternative, of course, is that there's a lot of uncertainty around. There's still things going on overseas that might make people nervous. We know that consumer confidence is still a little bit on the low side. It's possible that that doesn't eventuate, the upside doesn't eventuate, and there's some downside that eventuates, and that affects the employment market. That would have different implications potentially for monetary policy.
And here is a question I think that a lot of people can probably relate to this morning.
What is your message to a family who can't get into the property market now for a first home, but with the same income, combined family income, could have gotten into the property market 20 years ago? There's a relationship between, and I know you don't like to look at it or whatever, but there's a relationship between interest rates and property prices. So what's your message to that family who are facing renting for the remainder of their time?
It's a very, very difficult situation, David, and as an individual and as a citizen, I think we're in a very difficult position with the property market, and I don't actually think most reasonable people think that this is a good outcome. Having said that, there's nothing that I can do personally about it. We don't target housing prices. It's true that part of the transmission mechanism for monetary policy is through the housing market, and we're observing a little bit of that at the moment.
Have come down, property prices have gone up.
Well, they typically do, although I have to say that as interest rates were rising as well, property prices were going up.
That was after a pandemic where you threw billions of dollars at the property market.
So what I would say is that, yes, you're quite right. That is part of the transmission mechanism monetary policy. Can we impact housing prices, or should we impact housing prices? No, we have to focus on our mandate, which is inflation. I've said a number of times before, the problem in the housing market is a structural deficit of supply. That is the problem. Governments now get that, and you are seeing some action on that, but it's going to be slow to work its way through. I'm not confident it's going to make any impact in the next 2 years. So the bottom line is that all I can do is make sure I keep inflation low and stable, and I keep employment as strong as possible, because that gives people the best opportunities to get jobs and be able to possibly get into the market.
It's not about offsetting, it is more about giving the relief through a rate cut.
No, we're not in the business of offsetting price levels and giving people relief. We are in the business of targeting inflation and employment. That's the aim.
So, Michele Bullock holding her ground on Tuesday in that press conference. The big takeaway for me is don't necessarily expect another rate cut before the end of the year. Just the language, the way that she was talking. And remember, November is a tricky time to cut the cash rate because of the upcoming Christmas spend by consumers. And I just wonder how much of an issue that is, and that factors into their thinking looking ahead to the first quarter of next year, because they don't want to see any negatives creeping in for the start of 2026. So what is your takeaway with regard to all of that? Did the governor do the right thing? Can you see where she's coming from? Let us know once again with either a voice message or an email.
Eager to expand your property expertise? Enhance your real estate know-how with us.
And right now it is time for another property tip, and we take you back to Adelaide, where recently we were talking to Maddie Visser. And Maddie, you've got a property tip around getting money, loaning money.
Yes, I think a lot of my clients often assume that because they pay their credit card facility back each month that it won't impact their borrowing capacity. However, each lender will take into account the limit that you have access to. So any credit card or Afterpay or Zip Pay facility will reduce your borrowing capacity. Credit card limit, for example, of $10,000, they will assume is a $300 a month expenditure. And now this would reduce your borrowing capacity by $30,000 to $40,000.
Yeah, it's a lot. You know, on the other side of that, I just wonder how many people look at the Visa card as a bit of an insurance, you know, a little bit of that buffer without realising how that is actually hurting them with their credit score.
Correct. I mean, if you utilise it properly and you are paying it back each month on time, it won't impact your credit score. When it does impact your credit score is if you're not able to meet the minimum monthly commitment, and that's when it's going to start resulting on your credit report.
Decode the property market with insider knowledge and insights to better navigate your real estate journey.
Now, RBA has called for stamp duty reform for over 60s. How far off is the policy change in this area, and what kind of an impact could it have on the broader housing market? I mean, that's the first piece to that. But when you think of, you know, getting rid of stamp duty, my immediate reaction to that is, of course, that is so obvious. How many more transactions is somebody in their 60s likely to do before they meet their maker?
You're right. We're finding that undersupply is a significant issue across Australia, and this, I believe, is an initiative that could really unlock a swathe of properties across the country for that next generation to move into. A lot of people of this era, they're rattling around big homes on big blocks, and unlocking this could be a potential to enhance infill development with these larger, older blocks, or free up that lovely 4-bed, 2-bath for the next family demographic to move into. So the stamp duty reform is just one suggestion that we wanted to throw out there into the world, because I think it could start to have a domino effect in the market. But something needs to happen, because we've got a lot of this era of people feeling trapped in their own homes.
We help to break down real estate every day to help you better understand the Australian property market.
What we have seen is an increase in people searching for granny flat. In Sydney, it is now the number one search term. So normally the number one search term is actually pool, but pool has been knocked off of that top spot and it's now been taken by granny flat. And some of the other capital cities are also seeing granny flat reach into their top 10 search terms for this spring. In Brisbane, it came in as the 7th search term, most frequent search term. In Adelaide, it was at number 9, and in Perth, it was number 2. Didn't actually make the top 10, interestingly, in Melbourne. Didn't even make the top 20 in Melbourne. But other capital cities, it's certainly rising through the ranks.
Yes, and I know that we talk about this every time, Victoria, but overseas buyers, they're still being attracted, aren't they, into the Gold Coast? You're still seeing that come through reasonably strong in 2025 in October?
Absolutely. We always have inquiries from overseas, getting lots of people inquiring from New Zealand at the moment, definitely interstate. And touching on a point you mentioned before, we still have a lot of people on the Gold Coast who are actually downsizing. So to help with that idea of the mortgage and to have things covered. So they might just be moving, one suburb over, even staying within the same suburb, but they're actually downsizing so that they can cope with that and enjoy the lifestyle.
We connect you to the best real estate information across Australia. The Real Estate Podcast.